Okay. Okay, so everyone, thanks for coming to the webinar. We're just going to give it a 30 seconds, maybe a minute more to allow everybody to filter in, and then we'll get started. The aim today is about 45 minutes. We'll probably try and keep it as close to that, or if not under that, as possible. So we'll get going just in a minute or so. Okay, I think that looks pretty good now. Okay, I think we'll get started. Stephen, Judy, are you okay to kick off and start?
Yeah, go ahead.
Okay. Okay. Thank you very much, everybody. Just quickly. Is the sound okay?
It's okay now, yeah.
Yeah.
Was it flicking in and out there?
Yeah.
Yeah.
Okay. Hopefully that doesn't happen again, but you can let me know if it does. Okay, listen, thanks everybody for attending our webinar. So as I said before, we're going to try and keep it to about 45 minutes, if not under it. And obviously the topic is, should I set up as a limited company or a sole trader? Essentially, this is a question that we seem to come across quite frequently. So we thought it was useful to do a topic on it so that you're aware of the kind of the practicalities associated with both, and then assess which one is better. Because it depends on your circumstances. So we're going to try and give you as much information on that as we can. And then obviously it helps with the decision. Just a bit about Toast. So Toast, for the more astute people that you've noticed, that maybe is not as obvious to some others, it's totally online accounting services and taxation. So that we set this up a while back, and really what we're focused on is providing sort of high quality advice, cloud-based accountancy services, which is it's a kind of a more modern approach to accountancy services, and basically providing it in a convenient way for you. So traditionally going and visiting your accountant and bringing them a stack of papers was the way it was done. Obviously with cloud computing and Zoom and Slack and various different things, that's now changing, and so basically we're moving in a modern era to make this a more modern offering, let's say. Just a few housekeeping pieces before we start. If you have any questions at any stage, please put them into the chat. We'll try and get through them as quickly as we can. So we'll do them as we go. You don't have to wait to the end or anything like that. If if there's anything else in relation to the sound, if you can't hear at any stage, if you want to drop that into the chat box as well, and we'll try and fix that as quick as we can. So we have a partner and a chartered accountant with Toast. So we have Judy Mooney, who's a partner and 25 years experience in general practice across various different sizes of businesses. Also a qualified insolvency practitioner in the UK and ROI. So I don't think there's very many industries that Judy hasn't kind of worked in. And then we have Stephen, who's recently qualified as chartered accountant and is head of client operations with Toast. So basically does all of the day-to-day operations, making sure everything runs smoothly here, and has a vast amount of experience in relation to tax and also customs and duties, which obviously with the Brexit situation is very relevant currently. So I think we're going to start off with just a general introduction to what we're doing. So obviously that's the three of us. So my name is Michael Rutherford. I predominantly look after the business operations for Toast. So I would be in charge of making sure that everything is working as it should be. Obviously we've covered Judy and we've covered Stephen. So as I said at the outset, when you start off at the very, very beginning of setting up a new business, this question of whether I should be a sole trader or whether I should be a limited company is more or less the kind of the first thing that you come to. And it really, as I said, it really does depend on your circumstances as what what is actually the best fit for you. Some people seem to think that setting up a limited company is the best way to go, but in reality, it might be just over engineered for what they actually need. But in some instances, it's far more appropriate. Likewise with sole trade, sometimes it's not the best way to go. You might need to set up a limited company. So we're trying to just give you a bit of information on the advantages and disadvantages of both. And then at least then you can make an informed decision. What we would say is that because it's such a pivotal decision, you're probably best to get some advice on it. So we do offer free consultations. So when you're starting out in that kind of business journey, it can be really helpful and very reassuring actually to just ask somebody who kind of knows. So you explain your circumstances, and we'll then say, look, a sole trade will be fine for you, or actually, given what you're doing, a limited company might be more appropriate. So that's what we're trying to do now, in as plain English as possible. Obviously, you don't need to know the technicalities of all the various HMRC requirements and legal requirements. That's what you pay an accountant for. So without further ado, I'll pass over to Judy, who's going to start just with the differences between limited company and sole trader. Very good place to start, obviously. So Judy, do you want to take it away?
Hi, everybody. I'm Judy. Michael has already introduced me, so I am just going to go briefly through the difference between the two. Firstly, I suppose with the limited company, the big thing is limited liability. So it's only limited to the company, as opposed to with a sole trader, all personal debts and all personal assets are taken into account. So therefore, your house, everything in a sole trader could be accounted for when it comes to debts, and they could go after that.
So just on that, Judy, so a limited liability, basically, if you actually had to define that, that's basically a protection. So it keeps all of your personal effects out of your actual business. It's a separation between the two.
So that's a big advantage of the limited company, in that everything is protected, all personal assets, unless you personally guaranteed it, obviously. But as regards the majority of everything, limited liability means you're protected, personal. In regards to tax, the director's salary is very much like any salary. You pay your taxes on it, and it's paid direct to HMRC. You're obliged to make a self-assessment return unless you've received no income or benefits from the business. As a limited company, you also have to pay corporation tax on business profits of 19%. The sole traders, you have to pay tax on all business profits and have to file your tax return by the 31st of January. So therefore, you know, depending on what you're earning really is what it boils down to. You know, there's a big advantage with a limited company if the profits are high.
Yeah. So I think the big advantage to a limited company is that if you earn 300,000 in 1 year, you can choose to hold that in the company and then, you know, maybe pay yourself a salary for the next 5 years. Whereas if you earn 300,000 as a sole trader, all that has to come out in 1 year. You don't have a choice.
So yeah, you just have to pay the 19% on the 300,000 and obviously whatever you decide to take out as salary. Whereas sole trader, you can imagine your tax bill on 300,000, yeah.
Well, let's hope we're making 300,000 at some point.
Nice. Yeah. Okay. The next slide, we see.
Sure.
Accounts and tax returns. So with a limited company, you must prepare annual accounts from the company records at the end of the financial year. These are filed with HMRC as part of the company tax return and sent to all shareholders. And Companies House must also file a confirmation statement with Companies House every year, which includes information about the director, shareholders and registered address. I mean, there's, I suppose, more work in the limited company, whereas the sole trader, you know, you have to keep accounts as well. You have to keep all your books and records, your income details of income and expenses. But you have to file them with Companies House, I suppose is the difference with the limited companies. And there are rules there in play, but there's still rules with sole traders in that, you know, it has to be filed by the 31st of January, etc. So, you know, it's much and much as in regards keeping books and records that have to be kept on both sets.
So if you're a limited company director, you have to do a self-assessment, annual accounts for the actual limited company itself, and annual return for the company. And if you're a sole trader, you just have to do a self-assessment, but you have to make sure you have all the information for both. Yeah. You have all the information behind everything.
Well, most sole traders will prepare accounts anyway. Do you know what I mean? So you would have to, you know, in order to get the profits off the business. So, you know, you're preparing accounts for a limited company, although you don't have to file your sole trader accounts with anybody, you know, you still need them.
Yeah.
Okay, sometimes a limited company gives the impression of a soundly based organization may be more credible. In some cases, in a sole trader, agencies and contractors may not work with sole traders because of the legal protection that a limited company provides. You know, depend again at what level of work you're doing. So if you're again, you know, in the realms of earning, you know, or working with big contractors, it might be more, you know, seen, you know, better as, you know, being a limited company, whereas, you know.
Well, see, some if they're going, sometimes if there's, you know, government contracts or education board contracts and things like that, they'll not work with sole traders. So maybe things like that, the prestige that you're a bona fide business comes with a limited company rather than just.
It just depends what you're aiming to work at or what you are working at, you know.
Yeah.
Okay, next slide.
Sure.
So national insurance, the difference between the two in the limited company, employers and employees, national insurance payable on director salaries and bonuses. In a sole trader, you have to pay class 2 national insurance of $305 per week and class 4 contributions and profits in excess of $9,568. So basically, you know, you're paying, you know, you're treated as an employee nearly in a limited company anyway. Do you know what I mean? So you have to pay over the taxes, or the company have to pay over, and you have to pay your share. And as regards to national insurance, yeah, that's the difference between the two. Yeah. Okay, the next
administration.
So, I suppose is the big one. In the sole trader, you register for self-assessment. If you plan to earn over 1,000, then you have to let HMRC know that you should expect a tax return from, or they should expect a tax return from you. Which simply, you know, a procedure is completed online now. It's quite easy done. As regards if your income's, you know, that small, accounts, I suppose, is not a, you know, you can just do what my turnover is, what my expenses are, you know, it would be quite a simple exercise.
Yeah.
Choose a name.
Just to clear up, that's turnover though, and not
Yeah.
profit. That's so that's right,
Oh,
isn't
yeah,
it?
sorry, it's turnover. Oh, your income over 1,000. Sorry, yeah, it's turnover. So
Because there's a lot of people who kind of say, "Oh, listen, I don't have to do it. Sure, I'm not making any money," and you kind of go, "Well, you are earning,
yeah,
but you're spending. You know, obviously your expenses are coming off it.
yeah.
So it's not
So
necessarily to say just because you're not making money, you don't have to."
yeah, no, if you're taking in 1,000, you need to, register basically. Choose a name. This is something can be fun, but just be aware of it. Just be choosy of your name. It can be deemed offensive. Well, I don't know what could be considered offensive, but just, think about it. Something in line with your brand, because that's what people would then recognize you, if you're a boutique or, or supermarket or whatever you decide, or a builder, maybe something in the lines, that so that everybody knows what you are. So keep records. Again, you have to keep records of your business sales and expenses. It is legal requirement to record all your business income and expenses. HMRC can request records for past 5 years, and failing to provide the information can result in hefty penalties. You have to do it, whether it's a limited company or a sole trader. You have to do it. Revenue can ask at any time, and it's something you just get into a habit of doing. It's better to do it to go along anyway. I would advise, rather than doing it once a year.
Yeah.
Even on a monthly or a quarterly or something like that, just try and keep on top of it.
Yeah.
Sending a tax return every year. So yeah, you have to send your tax return every year. So this is where the income and expenses come in. That'll have to be returned by the 31st of January. And then you have to pay your bill by the 31st of January. So you can file your online return quite early, so that you know what you're going to have to pay, and it will give you a chance to get the money together to pay it by the 31st of January. So you don't have to, it just has to be paid by the 31st January, but you can file the returns separately and wait till the 1st January to pay. So that's
just one question. So for example, so we've just got a question in, so we'll answer that. So they've asked, can we change the name after a year, for example, or do they actually need to re-register? So Stephen, Judy, anybody know if
is that for a limited company, or is it a sole trader, a limited company?
I would assume it's a limited company. I think, well, let's assume it's a sole trader. So
yeah, well, from a limited company side, it is possible to change the name. You're going to have the same registration, and your date of incorporation will be the same as a company, but provided that the name is available as a limited company, then yes, it is possible to change it, but the name does have to be available.
Sorry, it was a sole trader actually. So
was it a sole trader?
It is a sole trader, so it would just be a re-registration with HMRC or an amendment to HMRC.
Well, the HMRC registration, you're registering for self-assessment, and you're given your unique tax reference number, and that's individual to that person. So the name, yes, can change for that, but in terms of the requirements, tax returns and stuff, it's going to be the one registration under the one tax reference number.
Yeah. Okay. So you can just update HMRC with yeah. Okay.
So when you're doing a tax return anyway, you have to put down from what company you make the money. So you would just put down that that sole trader account.
Oh, okay. Yeah. Makes sense.
Okay. Administration on the limited company. They must be registered with the Companies House. So that's the first thing to set up a limited company. Annual accounts and confirmation statements must be completed and filed with Companies House every year by the due date. So again, you have your due dates, same as sole trader, you're going to file accounts as such. You have to maintain and submit a record of anyone who has significant control over the limited company, and anybody with over 25% of shares is basically significant control. So that's a separate form, and it just has to be filed just to say that they own over 25% of the shares. HMRC must receive your accounts every year. An annual return must be completed, and any corporation tax owed must be paid to HMRC within 9 months and 1 day of the limited company year end. Register for self-assessment. So as a director, you would have to again do your tax return, personal tax return. So and send to HMRC every year. This does not apply for companies and non-profit organizations such as charity. Again, if you're not making any money, you don't have to do this. But most people will have to do it. Keep company records and report changes. So again, it's the same requirement. You should keep all records. I suppose there's a bit more requirements with the limited company, in that you have the company's house plus you have HMRC for your personal self-assessment. When
you're talking about records, can you give us an indication of what kind of detail that they're?
Well, you would have to keep a record of all your income, so all your sales, basically. So,
talk about every invoice you ever raise.
Yeah. Oh, yep. Yes. You have to keep a record of every invoice you raise, and keep obviously all your purchases, because they come off as an expense. So if you keep a record, every month, if you wanted to do it up in an Excel spreadsheet, income for January, February, March, April, or whatever it may be, what income, what sales invoices you raised in January, and what you bought in the different categories, and then, it's easy enough added up at the end of the year.
Yeah. Just an advantage of that is that basically with Xero and cloud accounting, if you're raising the invoices from Xero, it means that they're stored there automatically for you. So it actually kind of just saves the record for you on that. And then another kind of product that we would always kind of offer clients when they're starting up is called Dext. And basically what it means is that you can take a picture of your purchase invoice or whatever receipt that you've actually purchased, and that'll go into Xero as well. So whilst this all seems like a heavy administration thing, there are kind of quite clever ways to actually fulfill your requirements here. So whilst you might think, how am I going to keep every invoice for the last 5 years? I'm going to have stacks of paper everywhere. That's one of the benefits of cloud accounting, and why it's such a change to the way accountancy works. Just before we move on to the next slide, there's a question. And so if I'm already in business as a partnership with a relation, but I want to set up a second business in my own right, can I set up a second business as a limited company and still retain my partnership status with the other business?
Yes.
Yeah.
That's an answer. Yeah, you can have as many, you can be a director of as many companies. It doesn't matter. You just have to follow the requirements that's required of the partnership.
Yeah.
And the company. Yeah.
And then so at the end of the year, it's whatever's you're earning from both going to go on to your own tax return. So yeah.
Yeah, it's possible. It's definitely possible to do that. Okay. Next one, Judy. Yeah.
Yeah. Okay. Advantages and disadvantages. I suppose with a sole trader, you're your own boss. You make your own decisions. You keep all the profits. Startup costs are low. Lower professional costs, as you only need the tax return. You can easily change your business structure later. Disadvantages: personal liability, which is a massive one. If you have, a lot of debts in the sole trader, or you're borrowing heavily, then all your personal assets, are at risk. All day-to-day decision making is yours. Less attractive to clients. A limited company can be perceived as having more prestige, which we talked about earlier. Difficult to raise finance. Some banks, lenders prefer you to be in a limited company just to give you finance. Difficult to attract outside investors. Again, as we spoke about earlier, it's this matter of prestige. They like to see a limited company. And profits are liable to 20, 40, 45% income tax compared to 19% corporation tax. Again, that'll come down to how much you're making. If it's a small profit through a small sole trader, it's an advantage. But, as regards like the 300 grand profit,
Better unlimited. And just on the change in the business structure. So essentially you can start off as a sole trader, kind of grow and get a bit bigger, and then decide, you know what, I'm a bit big here, so you can transfer over at that stage.
If you're only starting out, maybe see how you go, you know, with the sole trader. You can always transfer, as you say, you know, incorporate at that stage if you're growing so much, you know, to protect yourself, you know.
Okay, excellent. Just before we move on to the next slide, we're just going to launch a poll just to see kind of from the audience. I should say it's anonymous, by the way, to see kind of what your current status is. So if you want to just go ahead and vote on that, just to see. So if you're a limited company or a sole trader, or if you haven't actually decided yet, so just to give us an indication of what we're kind of looking at there. Just another question, just whilst the poll's going and before we move to the next slide. It's very similar to the last one, but can I operate as a limited company and a sole trade business? I think it's fairly similar to the partnership question.
Yeah, it's the same thing. Yeah. So again, at the end of the year, you know, whatever profits they take out of the limited company will have to go on their return for the sole trader, you know, as well. Just be all lumped together, be one tax return.
You tend to see it, with separate activities. So you'd have someone who is predominantly running the company as trading something else, with a sole trade is something completely separate, which is the reason for splitting the two of them. So yeah. So you can essentially, you could have 10 companies that you own, and they're all doing 10 different things, and then they could all come together just on your whatever profit you're making from each of the 10, come to your self-assessment. Yeah.
And you tell, okay.
Yeah.
That's good. I think the poll, so far we've 18, I think, out of 23, and so far we have 7 sole traders, 3 limiteds, and quite a few who are yet to decide, which is good. So hopefully by the end of this, you'll know what your decision is. So we'll go for the next slide, Julie.
Yeah.
Okay, so a bit more just on the limited company.
Yeah, again, advantages, a limited liability, we've already spoke about, but it's just it limits you personally. So you're not personally liable unless you do something fraudulently, or you sign a PG, which is personal guarantee against a loan. So you take out a loan from a bank and sign your house against it. Well, then that comes into the company. You may say, you know, they can call that in at any time. But if a bank wants to give you money and doesn't ask for a PG, you know, don't go there, you know what I mean? So it's obviously all right, you know, you don't have any personal liability. Professional image, this is back to the prestige. Limited sounds better. Name protection, no one else can register the same identical name, so it's the same as yours, or it's yours and that's it. Potential tax savings. Again, we've said about the 19%, you know, if your earnings are high. You know, you have another big one is there's dividend savings, which I know Stephen's going to speak about, so I'll not go into it. You know, it's salary versus dividends and that, so that's a big tax advantage for a company. Again, if you're making profits, you can avoid paying national insurance as an employee and an employer. Pension contributions can reduce tax. Easier to sell. So if the business grew over time, or the limited company grew over time, you know, maybe there would be something in it, you know, a goodwill that, you know, somebody would be interested in buying it. If you go down that road, you know, more accounting requirements, additional costs, you know, most people would need an accountant with a limited company just for the filing returns with Companies House and that. Annual accounts to file, annual corporation tax return to file and pay, annual confirmation statement. If you have staff, or if you're receiving a salary as a director, then payroll needs set up with monthly RTI for submissions to let HMRC know you're paying yourself a basic salary. So that's basic returns to the, you know, the revenue, basically all the salary. Director details and business financials are available for public viewing. Own home address is also visible, so people can see you, you know, if there's a good, you know.
I think that's a big one for some people, is that's visible.
Well, you know, yeah, it's just one of those things. Self-assessment is mandatory for directors, so you have to do it, but you have to do it as a sole trader anyway. So, you know, it's really there anyway. It's kind of disadvantage of both, but you know, I think the big one with the limited company, you know, the big advantage is the limited liability, borrowing money. And if you are bigger, you know, your profits are high, there's definitely more advantages with the limited company.
Yeah. I think that the limited liability, certainly there's some people sometimes where they're signing leases and things like that, and they're not aware that is making them personally liable. And
you know, it's even like HPs or, you know, hire purchases or anything like that, you know. I mean, that can be put in a company name. The company runs into trouble, you know, fire it back and it's a company debt, you know, whereas again, that'll come to you personally in a sole tradership.
Yeah. Okay, we'll move on.
Yeah. Okay, incorporate, yes or no? Yeah, many people start out as sole traders due to its easy setup and little compliance requirements, but despite more admin, becoming a limited company can bring increased tax efficiency as well as limited liability. Again, the two big advantages of the company when you're making more money. So if you're thinking that way, are profits likely? If your sole trader earnings are relatively low, you're probably better. As I said, stick what you're at, you know, but if they're high, I think there's more tax advantages as regards to limited company. How will the business be funded? If you're borrowing money to grow your business, this is likely to be easier if you change from sole trader to limited company status. Again, banks, we've said this earlier, banks tend to be more favorable to limited companies. Why, I don't know, but you know, that's just the way they are. Protect your business name. So when you become a limited company, you register your business name with companies. This means no other company can use it. Protecting personal assets. Yeah. If you're set up as a limited company, then you're not personally liable if your business makes a loss or if someone makes a claim against you. Be wary of personal guarantees. I've mentioned this. I don't know what the whole state of the economy at the minute, will they be looking for personal guarantees, but hey, we don't know. Nobody knows. You know, with COVID and that, but you know, if you have no personal guarantee, you have no personal liability. Whereas if you take out a loan as a sole trader, obviously, you know, that's, you're personally liable, doesn't matter. Is the intention to sell the business in the future? If answer is yes. So if you intended to, you knew you were going to get a good company set up and you were going to retire, it could be worth selling it on, you know, like the business name could be worth money in the future, it could be a retirement pot, you know. Limited company is a better option there because people will be more interested in that, you know.
Just much easier to sell the shares in a limited company than having to
sell So you would have to individually sell everything through, you know, but a business name, if it's a limited company too, might, you know, if the limited company is well known in that, it could be worth, the name alone, you know, could be worth quite a bit of money, you know. So therefore, you know, people will be interested in buying that, you know.
Okay, next one. Just, do you want, we'll do one question just before we move on, but we're kind of running out of time, so I'm going to try and keep it. But if you do have any other questions, keep them going. We'll try to get through as many as we can. So somebody's asked, do I have to trade immediately? So I'm assuming this is if they set up a limited company.
So if they set up a limited company now today, no, they don't.
No.
You know, no, they don't.
You don't have to, yeah. And some people actually do it for protecting the name. You know, a lot of people are worried that potentially someone else can come in and take the name of their business. So you do see that some people register as a limited company just to protect the name. Now, you're still going to have to file accounts. Now, there's going to be dormant accounts. There's going to be obviously accounts with no trade going through it, but you still have to be compliant as a limited company. So you still have that work to do in terms of the filing requirements. But yeah, it does be done and just to protect the name alone.
Okay. We'll move on because we have 10 minutes, so we'll keep going.
Yeah. This is Stephen's.
Yeah.
Yeah.
Okay, thanks Judy for that, and
thanks, Judy.
Do the very entertaining
stuff. Well, I'll try and get through it. There's a couple of slides. I'm going to go over firstly what the tax from a sole trader perspective, and then I'm going to look at the tax as the director of a limited company, and then I'll finish off with looking at kind of the deadlines for each of them.
Just before you start, just so that everybody is aware, we're going to send out a copy of the presentation. So don't worry about taking down the tax rates and all that sort of stuff.
So don't worry about the figures or anything. But yeah, from a sole trader perspective, I know you touched on it before. You're taxed on your profits, and as you can see there from a formula, the profits is basically your income earned, taking away all your allowable business expenses for the year, and then that figure that you're left with is the figure that ultimately goes on your tax return. Now, be wary though, and be mindful of what the allowable expenses are. It's expenses that are wholly and exclusively basically for the purposes of your trade. You can't be putting in stuff that you're paying for personally as a sole trader. It's everything that is business related. Now the first one, income tax. There's two taxes to be aware of. You have income tax and you have national insurance. But I'm sure everyone's heard of income tax. I'm sure everyone doesn't like paying it. But unfortunately, it's just something that we have to deal with. And as business
taxes,
and as business owners, you just kind of have to be aware of it and have some kind of knowledge of what potential taxes you're going to be actually liable to pay. So first of all, you see the personal allowance figure. Now, everyone has the personal allowance, which basically means that you're allowed to earn up to 12,570 a year, and you'll not have to pay tax on it. So you can earn anything up to that level, and you won't be subject to any income tax. Now, as you go up and as you continue and as your income increases, then you start pushing into the higher rates. So once you're over that 12,570, then you start paying income tax at 20%, which is the basic rate. And then you increase it as you go up over that to 50,271. Then you're at the 40% higher rate, and so on. So you get the gist of it. As your income increases, you're liable to pay higher taxes because of it. Yeah. So yeah, that's it. And the next slide, Michael, please. Yeah. Now, this is the second one, national insurance. And as sole traders, there's two different types of it. And you have your class 2 national insurance and your class 4. Again, national insurance that you're going to have to pay is dependent on the profits that you actually make. The thresholds are a lot different than the income tax side of it. From an income tax side, you have your 20%, 40%, 45%, but you start paying class 2 national insurance as soon as you earn over 6,515 in the year, and that's for the 21-22 tax year, which runs from April to April. Now, most, if not all, sole traders will be subject to the class 2 national insurance. And for this year, it's at a rate of £3.05 per week, which is equivalent, I think, to 159 per year. So that's what you'd be subject to class 2. Then as you go on to the class 4 side of it, you have two limits for it. You have the lower limit and you have the upper limit. The lower limit for the 21-22 tax year is 9,568, and you'll start paying class 4 contributions at 9% on your profits over this figure. And it's going to remain at that level until you reach 50,270, and at which point it's actually reduced to 2% then. So that's the two most important taxes to be aware of as a sole trader. And we're going to now speak about the limited company side.
Just before we move on, so what dormant accounts would you need to provide if you set up a limited company and don't trade?
The dormant accounts are just a nil. Basically, it's just zero, but it's keeping with the requirements of, so you basically say there's zero activity, zero, instead of putting in your sales income and your expenses, that you would have zero in there and zero everywhere. But you just have to file them. You have to file it instead of accounts saying zero everywhere to keep with the requirements of the company's house. Yeah.
Okay, so you just file it. You just have to basically file it and say, "Listen, I didn't earn anything in that tax year."
Dormant. Yeah, and you just say it's a dormant company.
Okay, ready to go for the next one?
Yeah, next one.
Okay.
So now this is if you set up as a limited company, you're known as a director of that limited company. Now there's numerous ways that you can actually pay yourself as a director of a limited company. You have salary, you have your dividends, you have director's loan accounts potentially, but the most tax efficient usually is by taking a combination of a small salary and also a dividend from your company. Now, from the income tax side of it, it's pretty much the same as from a sole trader perspective, in that the rates remain the same. You still have your personal allowance, and as your income increases, you're going to be into the higher bracket. Now, the lower salary that you'd be looking to pay yourself is something to stay under that personal allowance. So you want to kind of take advantage of that, but then maybe take the rest of it as dividends, because dividends do have lower tax rates attached to them, but it depends on what salary you pay yourself. But it's also good to know from a limited company side that any salary that you do pay yourself is a tax deductible expense in the accounts. So whatever salary, as opposed to a sole trader, if you're paying yourself a wage, it's not an allowable expense in order to reduce your profits. But as a limited company, if you're paying yourself a salary, then yes, it is a deductible expense in the accounts. But
so I think there's two things in that really, which is that you can control with a limited company then the amounts that you pay yourself in terms of salary and dividends. That's right. And then also if you I was going to say something there and I can't remember now, so apologies. I did another point, but yes, that you should actually, there is a point where it kind of makes sense. So that's where an accountant basically can add value, is that we can kind of work out, okay, you're better paying yourself this amount of salary, this amount in dividends, and that's basically the best way of extracting it from the business, to kind of, it's minimizing your tax bill by utilizing the ways of paying it out. So I suppose that's what an accountant would provide for you. Yeah,
and just one other thing to be mindful of on a salary, if you do decide to pay yourself a salary, and I know it was on one of the previous slides, is that once you get to that stage, you're going to have to register as an employer, and then you're going to have to make the submissions to HMRC as an employee then from the salary that you receive. So it's an additional administration thing of being a limited company if you do decide to pay yourself a salary, but it's just one of those things that has to be done.
Okay.
And the next one's the national insurance side of it. Yeah, so national insurance side, from a limited company. So as a director, you own the business, but you're also an employee if you receive a salary. So you get taxed for your national insurance, both as a company and individually. Individually speaking, the first one is known as the lower earnings limit. Now, this one's very important, and it's one that some people often overlook, but it's one that it makes you eligible for a state pension. So as soon as you earn over 6,240 in the year, then you start qualifying for state pension. So it's just good to get over that limit, and then once you retire, you know that you have the added benefit of having that pension there. The primary threshold, which is for you as the employee. So once you earn over 9,568 in the year, then you're subject to national insurance at 12%. Up to 50,270, and then at 2% for income earned over that. So over the 50,270, it then reduces to 2%. The secondary threshold, which is on you as the employer. Then once you pay over 8,840 per year, then you're paying national insurance at 13.8%. So just to wrap up these slides, it's to be really tax efficient, and the main aim is to pay yourself a salary that's above the lower earnings limit that gives you your state pension benefits, but below the level where you'll need to pay either employees or employers national insurance. So it's a 1-1 if you can get a happy medium between the two.
Okay, just a few more questions before we finish up. So one that's very, very easy to answer. So can I book a consultation with yourselves? I've quite a lot of follow-up questions. Absolutely. Yep. There's a link on the Instagram or any of the social media sites that we have. You book that there, book a slot, and we'll basically be happy to go through whatever questions that you have on that. Second question, apologies, we don't really have time to get to them all, but the last one is, what if my predictions were different and I am actually, so I've actually made losses for the last year? Do I still calculate everything and put minus figures on the self-assessment? And do I still need to pay national insurance? I'm self-employed. So Stephen, Judy, can I have any thoughts?
Yeah, well, you still have to declare it on your self-assessments. You still have to let HMRC know what your income has been. Your expenses might have been a lot more than that. You're operating at a loss. the thing is, then you won't be subject to an income tax because you don't have any profits there to pay the tax on, but you still have to declare whatever you've made through the business in that year. And then, what was the second part of the question, Michael?
Basically, do I still have to calculate and put the minus figures in the self-assessment, and do I still need to pay national insurance if I'm self-employed?
Yeah, well, the national insurance is on the earnings anyway over that limit, so you would potentially have to be subject to the national insurance limit. But the good thing is, if you're operating at a loss, you can carry those losses forward, and then potentially offset them against future profits in that sole trade. So if you do decide to do better the next year, then the losses that you had in the previous year can be used to offset against those profits.
So it's actually quite important because it actually can make you pay less tax
exactly.
whenever the profits. And it's a common situation that, you know, you're loss making at the start whilst you're building the business, and then you kind of make profits as you go along. So it is kind of still very important to keep track of it so that you can offset it against future profits.
Yeah.
I think we've unfortunately run out of time for any more questions. So apologies on that. But if you do have any other questions, our contact information is going to be on the slides. There's a few key dates and things like that. So you can kind of read those yourselves in terms of when the particular requirements have to be completed. But we would just like to thank everybody for attending the webinar. If you want to follow us on any of the social medias we have Instagram, Twitter, LinkedIn, Facebook, YouTube, everything basically. But as we said, if you do have any follow-up questions and things like that, then we'd be more than happy to discuss that with you. But listen, thank you very much for attending our webinar. So
yes, thank you very much, everybody.
Thanks, everybody.
Thanks, everybody.